Hello folks, this is Jeremy Cloud from Cloud Financial with our September 2014 Educational Economic Update. In this month's video, we'll be discussing a couple of the economic events that occurred last month and provide some insight into what they mean for you as an investor. Please stay tuned at the end for a required disclosure statement. September was a solid month for the U.S. economy. The labor market continued to improve, and the latest second quarter GDP estimate showed that the economy grew 4.6% in the second 3 months of the year. Most importantly, the growth was shared across multiple sectors, which is a very positive sign for the rest of 2014. With the economy on a firmer footing, analysts are paying very close attention to the Federal Reserve. The Fed held an open market committee meeting in mid-September. After reading the economic tea leaves, the Fed voted to maintain the pace of its tapering and drop its monthly bond purchases to $15 billion. This meeting was pivotal because it was the second to last meeting before the scheduled end of the Fed's historic quantitative easing program. By voting to maintain the taper, the Fed boosted confidence that the U.S. economy is doing well enough to take off the training wheels. The next move is interest rates, and the question on everyone's mind is how long until the Fed raises rates. Speeches by several of the open market committee members show that there are different opinions on the subject. Some officials want the Fed to raise rates as early as spring 2015, which is earlier than most analysts had predicted. On the other hand, several other officials believe that the Fed should be extremely cautious and raise rates only when the Fed is certain that the economy has achieved enough momentum. These folks seem to favor leaving rates low until early 2016. Such disagreements are healthy because there is a lot of room for interpretation of economic data and debate about the effects of economic policy. However, these splits mean that Fed Chairwoman Janet Yellen must craft a careful compromise or risk a public break that could cause volatility in financial markets. Why do interest rates changes matter to investors? The Fed has held interest rates at rock bottom levels in order to encourage lending and boost the economy. Now that the economy is improving, the Fed will need to slowly raise rates to avoid high levels of inflation, which negatively affect the economy by chipping away at buying power. If the Fed raises rates too soon, the economic recovery could falter. If rates are left low too long, inflation could spike, causing the economy to overheat. To bond investors, rising interest rates will affect the market prices of the bonds in their portfolio. As interest rates rise, bond prices fall, as new bonds paying higher rates come onto the market. As financial professionals, we spend a lot of time managing these issues for our clients so that they are prepared for the rising rates. Bottom line, we know higher interest rates are coming. We just don't know when. The good news is that the economy is doing moderately well and the signs favor continued growth this year. Looking ahead, investors will be turning their attention to the release of third quarter economic and corporate earnings data to see how the quarter stacked up. We're also approaching midterm elections, which can often exert some pressure on markets as investors weigh how certain results may affect government policies. That's it for the September Educational Economic Update. If you have any questions or concerns, please give our office a call at the number below. Here are some upcoming events that we'd like you to know about. Social Security Workshop, UAH Shelby Center, room 205, November 6th at 6 p.m. Rejuvenate Your Retirement, UAH Business Administration Building, room 228, Thursday, November 13th and 20th from 9:30 a.m. to 11:30 a.m. or Monday, November 17th and 24th from 1 p.m. to 3 p.m. Retirement Planning Today, Calhoun Community College, Math and Science Room 159. Thursday, November 13th and 20th from 5:30 p.m. to 8:30 p.m. or Monday, November 17th and 24th from 5:30 p.m. to 8:30 p.m. IUL Workshop, Grill 29, November 18th or 20th at 5:30 p.m. Once again, this is Jeremy Cloud with Cloud Financial signing off for the month of September 2014. If you have any questions about what you've heard in this update or would like to discuss your personal financial situation, please give us a call at 256-715-0094. We'd be happy to talk to you.
While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investment advice is offered by Horder Investment Management LLC, a registered investment advisor. Insurance and annuity products are sold separately through Cloud Financial Inc. Securities transactions for Horder Investment Management clients are placed through Pershing Advisor Solutions, Trust Company of America, Jefferson National Monument Advisor, Fidelity, Security Benefit Life, FC Stone, and Wells Fargo Bank N.A.